Hi Lee, thank you for coming on to the HMO podcast.
Thanks, Andy, for inviting me. Really happy to be here.
Absolutely. Well, Lee, I've been keeping an eye on your stuff for a little while, and you're a very active member of the HMO community, and you recently shared a project that you're working on at the minute, and it really caught my attention because it was really cool and really stood out. And I asked you if you want to come onto the show, and you've done a case study for us, which is actually a slightly older project, which is fantastic. And I'm really intrigued to talk to you about your story before property and what you're currently doing. You're investing in central London. So I think there's a lot of interesting stuff that we can talk about today. So to kick us off, Lee, could you tell our listeners a little bit about yourself?
Yeah, sure. So my name's Lee Moffatt. I'm based in London. So I live in southeast London, about zone 3, so not quite central, but still in London. And yeah, I've been investing in property for about 12 years now, but most of that has been kind of part-time in addition to my day job. And it was only recently where in the past couple of years I've kind of really taken the property journey more seriously and got involved in it full-time.
Yeah, and what were you doing beforehand, Lee? Because I think your background is in computer science and AI, and you ended up doing some pretty substantial stuff in the finance world, didn't you?
Yeah, so yeah, my background was computer science and artificial intelligence. That's what I studied at university. I came out of university, went into a grad scheme working in banking, which had a very kind of heavy technology slant to it. And I ended up spending a lot of my time advising hedge funds, investment banks, and sovereign wealth funds on the use of technology within kind of investment.
And I guess this kept you really busy, did it, Lee? Did it have you all over the world in all sorts of times and hours?
Yeah. So it was a really busy job. It was really quite full on, particularly like at the start as a grad. You're working like really late hours. It's not uncommon to be in the office at like 12, 1 o'clock in the morning. And then as my career kind of progressed, I ended up doing a lot more kind of international travel, going overseas. So yeah, I spent a lot of time in airports, hotels, and planes.
Wow, so I can imagine that's quite a stressful thing to do. And I think you've got a young child as well, Lee. And I think in your case study you said that that was actually quite a pivotal moment for you, wasn't it, in terms of actually career and thinking about the future?
Yeah, that's right. So, when you're kind of young, free, and single, like flying all over the place, it seems quite glamorous, and you don't mind traveling so much. But like later on in life, when you kind of have a family, have obligations, particularly when you have children, that really kind of changes your perspective. And so, even though like I may be, spending the weekend on Bondi in Australia, I really don't want to be there by myself. I'd much rather be at home with my family. And that perspective really changes things for you, and it really changes the way you kind of look at things going forward.
Yeah, you're not the first person to say that on the show, actually. I think a few people have talked about their story and the process that they went through and why they ended up doing the property stuff on more of a professional basis. And, that definitely that sort of common theme, about family and being able to spend more time with the kids is definitely there. I think it was Kevin Cox on the show on an earlier episode said to me, and I thought that this was really interesting and it kind of stuck with me, actually. Told a few people now myself, but Kevin told me that apparently you spend 85% of the time you'll ever spend with your kids before the age of 16, and you bought your first property in 2008, so time goes really quickly. So I totally get it, and coming from the industry that you were in, Lee, and I imagine it was quite exciting and a huge. I imagine there was a huge number of opportunities for you as well, and some really good career potential. But I imagine that was a really tough decision for you as well at the same time. I mean, from a passion point of view, did you have to give up, part of your passion? Did you have a genuine interest and passion in what you were doing? And from a financial point of view as well, you had to live in central London. It's not cheap to live in central London, and the security of having a job, is a big part of why a lot of people stick and continue to do the same thing. What was on your mind when you went through that transition? Was it a tough decision, or was it actually an easier decision?
It was really a tough decision. I I was wrestling with the decision, like whether or not to go full time into property or not, because my career was kind of taking off. I was doing really well. I was working with, quite senior management within the banks. And I had like all this, all the international travel was, great. I got to see the world through my career. So it was a really interesting job. And at the same time that I was trying to do property as well, which was also doing fairly well, doing it on the side. But I had to make a decision. Like I couldn't, if I wanted to kind of move forward in my career, I'd had to do more hours, take on more responsibility. To be honest, not even though it was well paid, it wasn't that much more well paid, considering if I went into property full time. But I was like torn between the two. It's like, do I kind of continue to invest in this career that I've spent 10, 12 years building, or do I kind of pack it all in and just go into property full time? And it was something that I really couldn't make a decision on. And it was only until I say when my son was born where I really took stock of the situation and really decided where I wanted to spend my time. And was that going to be in the office or on a plane or in an airport, or do I want to spend time at home with spending quality time playing with my son? And it got to a point where I think it was when he was born, like the 6 months after he was born, I spent pretty much the whole 6 months traveling, different continents, a week in different countries all the time, and I only spent like 1 or 2 days back at home before I had to get on a plane and go out again. And at that point, that's kind of what helped me decide that whilst all this traveling is great, it's too much, and particularly in my career, there's no such thing as part-time. You either do it or you don't. And so you really have to kind of make that decision. And so I got to the point where I said, look, I can't do this anymore. I really want to spend time with the family. And so I decided to leave the career behind and go and pursue the property side.
Yeah, that must have been such a big decision. And I think this is a really interesting conversation to have. And it's always different, with different people. But I think what's useful is to give as much context as we can as possible. And did you have some investments that were already performing elsewhere, Lee? Maybe some of your property stuff was already there to give you a fallback income. I assume there was definitely a significant sacrifice that you had to make and a lot of financial planning. What when you looked at the finances and sort of what you would have to sacrifice, was there a game plan to that? Did you have something to fall back on for a period of time and a growth strategy?
So to be honest, there wasn't a huge amount of planning behind it. I did have a bit of a portfolio behind me that I built up slowly over the years, as I said, doing it part-time whilst I was working. But it wasn't a significant income. It wasn't enough to replace what I was earning, and I was earning pretty good money working in finance. But when I made the decision, I knew I had enough I could scrape by if we tighten our belts, and it would cover our outgoings. It would cover our mortgage, which at the time, and so it was a tough decision. I must say my wife wasn't too happy at the time when I told her. But she's been incredibly supportive throughout that process, and there has been kind of really, it was a really tough decision to take, but ultimately I think it was the right one.
Yeah, well, I think sharing that context is really good, because I think the assumption that a lot of people would like to make is that there must have been the equivalent there ready waiting from investments that you'd already made. But actually, in your example, and lots of examples of people I've spoken to as well, actually, there is a big sacrifice that you've got to make. You've got to cut back on various things here and there and actually accept that you need to live a slightly different lifestyle for a period of time. And then, of course, the big challenge for a lot of people, and I don't know whether you found this yourself, is that once you start to fill that gap with the new properties, as your property business grows, the temptation is obviously to draw on that and to pull that. And I always find that that's sort of at conflict with the ability to grow that portfolio, because of course the more you leave in, the more you leave to recycle and to compound, the quicker that portfolio will grow. But just taking out £1,000 or £2,000 a month from a portfolio actually really impedes its ability to grow and compound over a long time, doesn't it?
Yeah.
Did you have you put an action plan like that in place? And I guess the question really is actually, what does your strategy look like now then, Lee? Obviously,
Mhm.
I assume you want to replace some of that income, but obviously you want to continue to grow that portfolio. And you're in central London. I'm really looking forward to talking about your project, but a lot of people think that this strategy just doesn't work in central London. So how are you making this work for you and your game plan and your objective?
Yeah. So, as I said, like there was a lot of sacrifice that had to be made when I decided to kind of leave the career. And one of them was like, we sold our car, we sold our house to raise kind of capital to start
Wow.
investing into property. And so the first project that we did, we had some funds to invest in some of our existing portfolio to see what could we look at and how can we optimize what we have already, and then also look to see how we can acquire additional assets. So we put some funds aside in order to kind of reinvest and develop some of our existing assets, but then also we had some funds to do another project. And so that's kind of how we look to get started. But ultimately, we know that eventually we're going to run out of funds, and so we need to start thinking more strategically. How can we scale that going forward? So I guess what we needed to do was create a use case or a proof of concept for ourselves to
Yeah.
show that, look, this is how this is how we're going to move forward. This is proving that we can do this and we can make it work.
And you're in central London, so is the plan to continue doing it there? Because I think there's a strong argument to say that it could work, or certainly from a returns basis, it can work better elsewhere. I mean, I know looking at the case study you've done, you've got an incredible return on it, but actually the ability to acquire those sorts of properties, the physical amount of cash that you need to generate that same return is substantially more. Do you think long term that actually that's still an opportunity in central London and still where and how you'll grow your business?
Yeah, no, absolutely. And we looked at this quite carefully. We do have some investment properties outside of London, and because like historically we've always just invested in London because that's where we live, that's where we know. And obviously the amount of capital that you need to invest to acquire a property in central London is quite high. So we did have a little stint where we experimented up north, and we bought a few properties out there, but ultimately we wanted the same control over the properties that we have in London, and also if there were any issues, it's a lot more hassle to go up there and deal with those issues, and we didn't want to be in that situation because there's a lot of wasted time like traveling backwards and forwards, as well as the headache of trying to deal with it remotely. So we made the conscious decision to kind of invest locally, invest around where we are, and we've a 30-minute to maximum 1 hour drive from where we live. And that's kind of our approach going forward. So we needed to find a model that worked for our location, and that model we found was HMOs. And it took us a while to figure it out and how we could do that. And the the way that the approach that we took was really doing the larger HMOs, because that's the way we could add the most value to the properties, and therefore we could refinance, pull our cash out, and go again.
Yeah, was that like almost the economies of scale of being able to deploy larger funds, actually generate more in terms of actual cash returns, then made it viable in central London?
Yeah, exactly. So it's a mixture of being able to get that return or get the cash recycled after each project, but also the number of projects that we would need to hit the cash flow targets that we set ourselves. We could do that with fewer properties than if we had to done it up north.
Yeah, absolutely. And I think you've said some really important stuff there, actually, and I think being really, really focused and really aware of exactly what your strategy is and how it needs to work in particular areas of the country is so important. I think you've obviously prioritised, by the sounds of it, the ability to keep the management under wraps, be able to actually control what you're doing quite closely, and that means being within a certain distance, and then actually prioritising that means that the compromise is, okay, this is what the property values are, and we've got to then make it work in terms of the finance that we can have at hand or the cash that we can raise. Therefore, that determines even the size of the HMOs. And this is actually something that I talk about in the roadmap quite a lot, and it's developing a strategy based on what, first of all, your objectives are in terms of the sort of business that you want to create. I have managed properties all over the country, and found it really challenging to manage portfolios at a distance. It's much easier when they're close, and I totally get that, and I can see why you've done it as well. But for some people, that sacrifice would just be too much, so the balance might be investing a few hours away but still keeping those capital values down a little bit to make the strategy work, and that's fine. And I think it all really depends on that, first of all, that objective, your personal objective, but then actually moulding exactly what you need to do around that location is so important. And it's really interesting because I think, talking to you, you're right at one end of that spectrum in your central London, very expensive properties. And your case study, which we're going to talk about today, just quickly just give our listeners a bit of a tease, but the purchase price of the property value is 750,000, and actually your revaluation was just under 1.2 million. And this was a 6-bed HMO. So just to give everyone listening into today's episode an idea as to the type and the scale of these properties that Lee's talking about, that's kind of where those projects are. So very few people, I think Roland is an example, Roland Bricks and Daughters is investing in Central and doing properties of a similar value. And Emma Stubbings as well, one of our fantastic guests, doing a lot of stuff in Cambridge and properties of a similar value. But it just goes to show that this can absolutely work. This strategy can work anywhere, but you've got to be really, really specific and aware of exactly how it needs to work. So, Lee, where do you think you want to take all of this? Are you building a portfolio just for yourselves? Or are you thinking about extending that to build a business, to actually service other investors? I know you've talked about using private finance, but at this stage, what are you thinking in terms of the business direction or your overall objectives?
So we're currently in the process where we're making that transition from being a property investor to actually having a property business, and really treating it as a proper business. So bringing in processes, bringing in staff to help us scale and grow this business going forward. And there's a very, very different mindset treating it as a business owner. And so a lot of the effort has been in the past year is really trying to understand what our business model and understanding how we can scale it and how we can systemize it. And it's only recently that where we've started to see that kind of start to pay dividends, whereby things like our sourcing process is really kind of almost on autopilot now that we've put those processes in place, and we have staff managing and maintaining it. So there's less stuff on my shoulders, and it's more spread evenly amongst a wider team, and that's kind of where we're looking to grow it. We're looking to take it as a business, and there's probably different aspects to that business. So first of all, there's the management side of it, which is looking after the existing HMOs and all the new HMOs that we create. So making sure that we have that kind of tenant experience, and have the smooth, streamlined management of that, so it's managed the way that we want it to be managed. But then there's also kind of the more investment side of finding the deals, and acquiring them. And we're working with investors to help them kind of grow their funds through investing with us, or looking to kind of partner up with them on, say, like a JV basis, so that they can help them understand and get into property as well.
Yeah, it's so interesting hearing you describe this different approach that you've got to take when you want to actually build a business, like a sustainable business that allows you to extract yourself, free up your time, as opposed to just being a portfolio landlord or just an investor. And it is those things that you mentioned, the systems, the processes, having a team. And actually, I think, again, just going back to that earlier point, it's that conflict of not taking everything out of this business or portfolio and actually using some of those funds, for example, to pay the staff or to invest in some systems that actually make the next steps a little bit easier. Sometimes it's a step back, isn't it, to take that step forwards, but that's what we've got to do in business. And it certainly sounds like you're going to have a great service to offer people, in particular when we go through the details of your case study. If this is the sort of stuff that you can expand out to other investors, then there's a lot of scope there, even in central and even in the capital, to do this sort of stuff. So let's have a chat about your case study, Lee, because
Sure.
this particular case study is really fascinating. So headliners, I think we've already mentioned purchase price, property value 750, so not a cheap asset at all. Stamp duty and legal costs alone were £50,000, and then the refurb was 148 grand. So it's a big refurb. And was this a full back to brick refurb in the end, Lee?
So originally, because the property was actually quite a modern build, we thought that we could probably get away with just doing the alterations to the property. And so we actually had a lower budget set for the refurb. However, it turned out that modern builds don't have the same level of build quality as like the typical kind of Victorian terraces that we're used to doing refurbs on. And we found things like, the walls were literally made of paper. Like there was this kind of paper honeycomb structure wedged between two kind of bits of plasterboard, and they just didn't have the structural integrity that we needed to do the alterations that we wanted. So, for example, like putting fire doors and frames onto the walls. So we literally had to take all the internal partition walls out and rebuild them from scratch in order to kind of meet the specifications that we needed. So in the end, it turned out to be a full back to brick refurb, but it wasn't intended to be that way. So there was a lot more wall work involved than we thought.
It's funny, isn't it? You absolutely would make that assumption, and I think I'd do the same. Modern build, probably going to be in good nick once we start peeling things back, but that is why having that contingency and that plan B is always just so important, because you never ever know when it comes to property. So this was a 6-bed, wasn't it, Lee? And actually you really changed the floor plan on this. And was that a key part of making this property work?
Yeah, so it was originally a 3-bed townhouse, and it was a little bit awkward in terms of like they had a kitchen downstairs with a garage, and then the living room was on the first floor, so it had a really big first floor living room, but then it had a couple of like really pokey, awkward shaped bedrooms as well. So we wanted to kind of even out the space, so every room felt, as well as giving a big kind of open kind of big kind of communal kitchen space as well. So what we did was we ended up removing all the internal partition walls and then re-architecting the space so that we could get ensuite bathrooms to each of the bedrooms, but also make sure that those rooms were bigger. So the family bathrooms, for example, they had one very, very large ensuite bathroom, and it had one very large kind of family bathroom, but they were a bit too big. So we ended up giving some of that space back to the bedrooms to make the bedrooms bigger. And then the existing space we gave, the remaining space we gave to the ensuite. And then we took space from the larger rooms to make the ensuites for those larger rooms. So we ended up with very, very balanced rooms, about kind of between 10 and 12 square meters in terms of room sizes, which were good sized double rooms, particularly for kind of central London, where you've got you tend to find lots of very, very pokey kind of single bedrooms in central London, which we wanted to try and avoid.
Yeah, and I was actually going to ask, the en-suites and doing the en-suites, do you feel like that's an essential part of making this work for you, Lee? I'm sure it's helped push the rents, but in terms of rental demand and longevity and future proofing, is that a conscious decision that you made to put those en-suites in there? Because en-suites are expensive, aren't they, to install?
They are, and it's definitely something that we wanted to kind of add or ensure that we gave, because first of all, en-suites room they rent quicker, but also it gives a much better experience for the tenant as well if they have their own private bathroom. It also allows us to charge a premium for those rooms as well. So in the long run, it actually is a benefit to have those en suites. But also, it was quite timely that with the whole project happened during the COVID period, and so having that a private bathroom was also a benefit in terms of helping us rent those rooms quicker as well during those tough times.
Yeah, I'm sure it was. I mean, none of us expected that to happen. But one of the things I've always said about en suites is, interestingly, where most of my stuff is here in Sheffield, and a lot of my accommodation is student led, en suites actually aren't a key feature of sort of sector, and actually we can still achieve within a few percent top rents without those en suites. I think long term that shift will probably change, although the housing and the actual floor plans or footprints here make it quite challenging to actually get en suites into a lot of the houses. But I think what it will always do, if nothing else, is actually put you ahead of the alternative rooms of the same size and spec. If you've got that en suite, somebody's just going to pick yours instead of theirs, and it gives you that huge degree of rental confidence. And for me, looking ahead at all the changes that we're likely to have to deal with, there's going to be more legislation, there's going to be more competition, there are going to be more restrictions with Article 4 and lots more hoops for us to jump through as landlords. But I think having that longevity, that future proof in any way we can, but certainly en suites in the professional market, I think is becoming more and more important. I want to jump to the numbers at the end, because they're huge and really exciting. But 6 beds, I've got to quiz you about this. So the gross rent, I mean, this is staggering to me. 6 beds at full occupancy would be over £76,000. I mean, what room rent are you getting to achieve that, Lee? It's phenomenal.
So we're getting around £1,150 per room.
Wow. I think you might have broken the record for on the podcast for achievable room rates. That is really quite staggering.
I must say we're not the most expensive room in the area, because I don't know if you know, but in Canary Wharf we have a big co-living company called The Collective.
Oh, I do know The Collective, actually.
They're actually more expensive than we are, and their rooms are smaller.
Oh, yeah. So I do know a lot about The Collective, actually, interesting for a number of reasons. And they're almost like purpose-built professional accommodation, aren't they? Yeah. Are you second then? Is it only them above you, or are you competing with people who are actually providing accommodation of a similar sort of spec to you?
So there are a couple of other kind of smaller landlords who've got similar kind of price rooms. I think The Collective are the most expensive, and I think they go for like 1,300, 1,400 per month for their rooms. But obviously they've got they're purpose built. They've got gyms and swimming pools and things like that, so which we couldn't really offer those kind of facilities, unfortunately. No. But we think in the wider market, we're certainly one of the more expensive, but in this kind of niche on the kind of the higher end, I think we kind of compete quite nicely.
I think when people see the pictures of what you've done, and it's all obviously there available inside the roadmap, but you can see why you can charge those premium rents, because it's an amazing product. But just I want to ask you, I'm quite interested actually, Lee, to know your opinion. You've got a product that's similarly comparable in terms of prices there with The Collective, but actually a little bit different in terms of the actual product itself. It's more communal, you've got smaller rooms, so there are definitely points of differentiation between you and those PBSA providers. What do you think the preference is with tenants? Or maybe there isn't a preference, maybe it is just a different product and they can live in harmony and in parallel. What do you think? And do you think there's any threat there long term looking at that sort of model?
I don't think there's any threat there. they have a very specific model and they target very specific kinds of tenants. What we found is that our rooms are slightly larger, so the tenants appreciate the bigger private spaces, but also they don't like being in a very very big property where they don't have that sense of community. I think one of the things
Mm.
that our tenants really appreciate is that it is a smaller group, and it's a close knit group that we try and build within the properties, and they like the fact that we've taken the time to almost curate the types of people that are in the property so that they all get along and they all enjoy each other's company and they build proper friendships. That's very difficult to do in those larger properties where you're one of a large number of people in there. And I think there was a survey that was done by IKEA. They were doing like a co-living survey, and they said that the ideal number was between 4 and 10 people where people wanted to live. So that's the kind of number that we're trying to target with our HMOs.
Yeah, I think you're right. I recently watched the documentary about WeWork, and I know it's more to do with working as opposed to living in residential accommodation, but I think the underlying fundamental piece around community is pertinent. And what was clear was it's really challenging, if not impossible, to actually force a large number of people to be a community together. And the great thing, and what you've just described, is between 6 and 10, and actually, we get it now 4s and 5 beds as well, is that small community can be really sticky. They can really bind. They can forge really strong relationships. And the great thing is that they then stick around for longer, and they actually make our investments more profitable, and they're happier tenants as well. And all around, it just creates a better product and a better environment for tenants as well. And I agree. I struggle to see that long term that sort of model could be a threat. I definitely see that there's the opportunity there for more of that as well, because I think more young people are looking for shared accommodation, and clearly the sort of spec that you're offering is not available in abundance. I guess we'll see what happens over time. So go back to the numbers then. 150,000 on the reef. This design is incredible. Where did you get all the inspiration from, Lee?
So I'm lucky that my wife is actually a designer, and so I borrowed her to do the interior designs for the property. And she's actually since left her full-time career and joined me with the business. So she's now doing full-time, working on the business, working on the interior designs for our upcoming projects as well.
Wow. So now the both of you are full time in property, and what a team as well. So you've got the numbers side covered, Lee. Well, certainly I hope so. And your wife's got the design stuff covered. Spec is absolutely. I'm just looking at some pictures now. Spec's amazing. That herringbone style floor you've got in the kitchen is absolutely fantastic. So gross monthly rent over £6,000, and doing over £76,000 a year. Really, really, really incredible. And what I think is most incredible about this deal, and I was honestly I was really surprised when I read it, Lee, because I think when I read the figures at the top of the case through the headline, I didn't think the performance at the back end would be as good as it is. I think I was still quite sceptical, and just didn't think it could work as well as this in London. But you only left 88,000 in this deal with an M valuation of approaching 1.2 million. I just think that is absolutely incredible. I mean, so hats off to you, Lee, for making that work. And one question I've got about this is, did you have confidence that would be the case? Where has that valuation come from? And was the performance of this deal, hinged upon that valuation? Did it matter that much? Was it better or worse?
So this was the first time that we'd gone to a commercial valuation on a property, and it's one of the reasons why we actually went down the route of getting an all en suite HMO. We wouldn't have been able to get that commercial valuation if we didn't have all en suites. And we worked very closely with our brokers and our RIC surveyor to try and get to try and understand, first of all, how that commercial valuation worked. And so we actually commissioned a RICS valuation to say, okay, if we're going to go down this route, what would be the end valuation, so that when we refinance it on the back end, what could we look to kind of leave in the deal? What could we look to kind of take out? And so by having that valuation done, it really gave us the confidence that we were going in the right direction. And so now for every project going forward, we have that valuation to make sure that we've got confidence in the NGDV. And it also gives us, confidence when we're speaking to investors to say, look, we've had this independently verified with a RICS Red Book valuation, so we know what the minimum value is going to be at the end of the project.
Wow, that's really interesting to hear, and I think you might be the first person who's ever talked about doing that. So you essentially get a hypothesized valuation done based on your plan, and you actually get that from a surveyor as well. That's really interesting.
Yeah, so we put together a full valuation pack for the surveyor, so that they can see what that end product's going to look like. So we give them floor plans. We give them because my wife's a designer, she does all the concept renders, so they know what it's going to look like as well, from a visual perspective, so they can actually see what that end product's going to be, and then they can come up with a more concrete valuation based on that end product.
Wow. So I guess after all costs, it's netting so about 2,600, which is for, if you take average salaries across the UK, that's pretty much there, and that's one deal, and you left 88,000 in it. So granted, it needed a lot of cash to actually get into the deal and actually make it work, but it just goes to show one deal really has, for many people, ticked that box to replace their income, which is just staggering. And so the return on the capital employed, sort of 35%. It's a phenomenal deal, Lee. It's really, really interesting to see such a good example of it being done in central London, and it's great to know that actually, because it can still work, there's still that opportunity to create that great accommodation in central London, because like you said yourself, there's still a lot of old, tired, small rooms on the market, and actually I think that predominantly dominates the London rental house share market, doesn't it?
Mm-hmm. Yeah.
So Lee, for anyone who's sort of maybe a few steps behind you and wants to do this themselves, they've got maybe some considerations or concerns about leaving their job, but want to get into the property stuff more full time because they can see that they just need to be able to commit more, to give more to their business. What advice would you give them? You obviously took the leap quite early on in your business life. What advice would you share to anyone who's kind of thinking about following in your footsteps?
So I guess I wouldn't recommend doing it the way I did it. It's a bit scary when you take that kind of leap. So I would suggest try and build something up in the background and get yourself to a point where if you might not be replacing your income, but you at least are comfortable that you're covering everything, and that you're not stressing, because when you're stressing about financial concerns and making sure that you pay the mortgage and the bills, that can really impact how you perform in your business or perform in your investments. So you don't want to have that desperation that I need to find a deal so I can pay the mortgage. So yeah, build that kind of safety net behind you before you do leave your job. But actually going forward, like once you do decide to make that leap, you do need to treat it as a business, and not kind of a part-time hobby. And so you need to kind of make sure that you're focused and you are spending the right amount of time on it, but also you need to have that focus in terms of what your business model is. I certainly had when I first left the job, look at so many different options in property investment and try lots of different things out, but not actually get anywhere. And so by focusing on one business model and really refining it and making sure that works, and then rinse and repeat, that's kind of the best way to kind of move forward in your journey.
I think that is absolutely fantastic advice, Lee. Focus for me is something that I just regurgitate to so many people. It's so easy to get distracted, so easy to look at the different opportunities at hand, and there are lots of ways to make money in property, but actually if you want to do it well and successfully and continuously, you've got to focus. Find one thing, get really, really good at it, and only when you've completely mastered it, and in your case and in our case, it would be getting to that point where that business is self-sustainable, actually it's performing continuously without our involvement on a day-to-day basis, and actually continuing to grow without our involvement on a day-to-day basis. Wait until that point to actually then look at something completely different. And there are exceptions to this, but I think for 99% of people that is such good advice, and probably I think most people would generate far better results if they did follow it. And Lee, your advice, Lee, was pretty much don't do it the way you did it, which is good advice to share. But I think just to add to that, financial stress and on top of the stress of projects and things like that, and actually the general stress of running a business, I think there's that well-being point as well. I think, yes, it can be stressful and it's pressure that'll impede your ability to perform as well as possible. But I think just on a general well-being point, we've got to all remember why we actually want to do this in the first place. We've got to be and find a way to do it and enjoy the process as much as the actual result from it. Building a property business is really hard work. There are many more businesses that are easier to set up and start that need substantially less capital and are much less risky. So I think we've always got to remember that piece as well. So just from my own experience, I think just making sure that whatever you do and whatever risks you take and whatever stresses you are prepared to burden, just make sure that you're still always enjoying it. Lee, it's been an absolute pleasure to have you on the show. Can you give us a bit of a sneak peek as to what we might see from you in the near future? Have you got any projects bubbling away that we can keep an eye out for?
Yeah, so we've got another project that we're just about to finish, complete on, and then the whole refurb is about to start. So that's a 7-bed sui generis conversion from a Victorian 3-bed house, and that's in again in Lewisham in London. So a slightly different area to kind of Canary Wharf, but still very much inner London. And then we've also got another HMO project, which is going to be an 8-bed coming down the line in the near future as well. So yeah, we've got a few projects bubbling away.
It all sounds very, very exciting indeed. And Lee, if anyone wants to reach out, maybe get in contact with you, is there an opportunity to maybe work with you, and how would they be sort of best to contact you?
Yeah, sure. So you can always reach me on Instagram. So it's Lee Moffatt _property. I'm also on Facebook as well. And we've got a website at elmproperty.co.uk.
And of course, we'll put all of your details inside the case study in the roadmap. And Lee, you're really active in the HMO community. You're often posting about the stuff that's going on behind the scenes with you, and you're often offering lots of advice to other people in the community as well. So I would say that anyone who wants to sort of see what you're up to and chat with you about HMOs, that's also a really good place to come and connect. It has been an absolute pleasure, Lee. Thank you so much for coming on the show, sharing your story, and inspiring, no doubt, many of our listeners today to build their own HMO property businesses.
Great. Thanks very much, Andy, for having me.
Thanks, Lee.